In the past month, the big chatter in the financial sector is there a likelihood of bad loans in a portion of unsecured loans? You know, loans like credit card, personal loans and consumer durable loans for which banks have no collateral. Now, why this sudden scare? Because of what Governor Shaktikanta Das said. Governor Das said the pace of personal unsecured loan is growing too fast. We want to caution banks there can be challenges going forward and that they should strengthen their internal surveillance. Deputy Governor Swaminathan added unsecured loans have been growing at 23% for the last 2 years, while other verticals like corporate, SME, etc. are growing by 12 to 14%. We want to sensitize banks that this is an outlier. Maybe it's because of the digital lending opportunity making it easier. But our advisory to all banks and NBFCs is to strengthen their internal control systems. If we don't see those controls, we will have to introduce higher capital requirement, that is, risk weight. This warning has worried the market. So, here's our 360-degree perspective. RBI is right. Look at the rapid increase in retail loans versus total loans. Even higher is the growth in unsecured retail, that is, in credit cards, personal loans, etc. Basically, where the banks have no collateral. Also, the percentage share of unsecured loans in total retail loans has gone up from 19% to 25%. And the share of unsecured loans in total bank loans has also gone up from 4 to 7% over the last 3 years. So, how much should we worry? Now, SBI economist Soumyakanti Ghosh says there is no need to worry. In a report, he points out banks are already bringing down the number of first-time loanees, or what you call new-to-credit guys. They've also brought down their below-prime borrowers, and they've increased lending to prime and prime plus borrowers. And this is true of both public sector and private sector banks, he proves. He also points out that individual bank NPAs, that is, most of them who have reported their Q2 numbers, are showing lower NPAs. Now, CRISIL says, why individual banks, even for the entire banking system as a whole, NPAs have come down over the last 3 years. Retail NPAs have also come down, and NPAs in retail unsecured loans has also come down. Well, for NBFCs, again, the SBI economist says, retail loans are rising, but they are not anywhere near their past highs. More important, he points out, gross NPAs in retail loans for NBFCs has fallen from 6% to 4% over the last couple of years. Then, do we not have to worry? Well, let me give you some background numbers. Retail unsecured loans form 24% of all the retail loans. Now, within this unsecured loan category, credit card NPAs are higher from year-ago levels, personal loan NPAs are higher from year-ago levels, and NPAs in consumer durable loans is also high. CIBIL points out that loans under 50,000 rupees are a specially stressed category. In this group, 4.2% of the loans went bad as of June 2022. Now, for June 2023, it has jumped to 5.4%. Also, in this under 50,000 rupee loan category, one person is taking more loans because of credit cards, BNPL, buy now, pay later, fintechs, etc. CIBIL says people with 4 or more loans are increasing to 51% of the total universe. So, now how worried should we be? Let me put all the data I have together. First, the big numbers. Total retail loans in the country is 90 lakh crore. Of this, 24% or 21.6 lakh crores are unsecured retail loans. And only 0.3% are in the so-called worrying category of under 50,000 rupee loans. That is all of 27,000 crore rupees. Now, the default rate for all personal loans has risen slightly, but personal loans under 50,000 rupees are seeing much higher NPAs. Also, we are seeing these small ticket guys taking 4 to 5 loans at a time, so the likelihood of default is only going to increase. The other danger is banks and NBFCs are growing the unsecured loan category very rapidly, much faster than other loan categories. In fact, some banks are giving personal loans for even as long as 7 years. No collateral for 7 years is a long time. More chances of accidents, job losses, etc. But on the flip side, right now NPAs are falling for banks even in the unsecured category. And the so-called high risk under 50,000 rupee loans, that's a very small category, just 27,000 crore rupees, like I said. So RBI is not increasing the risk weight, that is the capital that banks have to set aside per loan. It is only advising, it is only cautioning. So we have to worry, but not worry too much.